Hello, everyone. So great to have you here. Eric Olson here with the Eco Landscape Mastery School. And I am very excited here we are. Okay. Hey, everyone. Great to have you here today. And we have a very exciting hour and a half planned for you today. I'm going to bring on our expert guest in just a moment. So for the few of you that are with us live right now, if you could just let us know that you can hear me okay, see me okay. Just on the right-hand side, the little chat window there, just let us know that you can hear and see me all right. That'd be great. Make sure that the tech is working, and then we'll get fully into it. So before I bring our guest on, let me talk a little bit about what today is about, because we're jumping in to a conversation about bookkeeping. Okay, Brent, I see all is good. Awesome. So today we're going to talk about the basics of bookkeeping. Now, for those of you who are just starting out, you may not be quite at that place yet where you're using like accounting software and you have all your bookkeeping really, really organized. And I remember exactly what it was like when I was at that place. And what is so important about what we'll talk about today is that this really comes down to a few things. It comes down to, one, how you manage your cash flow, which is how you keep your business alive and thriving. Two, it's about having everything organized in such a way so that you don't overpay in taxes, so that you don't get audited by the IRS and have other issues that obviously can come up. You don't pay penalties, if you're not able to pay your bills on time and all of that. The more that you can keep organized, how money comes in and out, and who it's going to and why, the better you're able to manage your cash flow and the less tax liabilities that you'll end up with. The other benefit is that you're running a business. And as a business owner and operator, you get a lot of benefits to the degree that you can purchase tools and have those be write-offs on your taxes, that you can have business meetings and be able to pay for that out of your business account. There's a lot of benefits that you can have running a business, where you can run a lot of costs through the business that are business related and not have that come out of your personal bank account. So it's really important as business owners that we set all this up so that we can, one, gain all the benefits of that system, and two, make sure that we protect ourselves from any kind of issues. I'll tell you a story another time, because we are going to do, this is going to be a 3-part series on bookkeeping. And another time, I'll tell you about what happened when we got audited by the IRS in 2009. So that's a little juicy story that we will hold on to, and I'll share that with you maybe next month. So without further ado, we are going to bring on our special guest. Denise Decker is our business manager and financial manager and bookkeeper at Permaculture Artisans and the Permaculture Skills Center. She's worked with us for 2 years, and she brings her 30 years of experience to our companies. And I have to say, since we brought Denise on, the whole business has taken off. The systems have come together. I've been able to step back from wearing as many hats as I had before and able to develop this program and other programs that we're working on. Really bringing Denise onto the team has made so much possible. And so I'm so glad that she agreed to come on today and do this 3-part series with you all, because what she has to share is really some of the crux of running a successful business. Last thing I want to say, for those of you who are just starting out and some of this might seem a little bit like advanced bookkeeping to you, bookmark these sessions to come back to, because as you grow your business, as you get a good base of clients and you start to scale your business up this year or next year, this is going to be really, really important stuff for you to weave in sooner than later into your whole business structure. So without further ado, I want to bring on Denise and jump into Bookkeeping 101. So welcome, Denise. You've got the floor.
Great. Thanks, Eric. Okay. Hi, everybody. So glad to be here today and to share some of my experience, some of my knowledge that I have. I do want to do a big disclaimer. I am not an accountant. I am a bookkeeper. Two majorly different people. Some of the bookkeeping that I do speak with our accountant and get guidance when I'm questionable. But again, the setup is the biggest part when you're starting a business. So I think I'd like to start with just kind of the some of the things you didn't know to know kind of a thing to start. Many of you may be just starting out a one-person show, which is great. So record keeping is huge. Some people may be computer savvy, some people may not. So I'm just going to give a few tips, starting from the one person who may just be doing their installs and everything themselves, not have the computer system. What should I hang on to? What shouldn't I hang on to? All the way to people doing bigger projects with employees or subcontractors, or what that looks like. Anything you spend, you want to keep the receipt. That's the receipts, your cash bank statements, your credit card statements are always going to be your backup tool, especially for an audit. So the biggest thing I always try to say is do not use cash. You have no tracking of cash. You can never backtrack in if you lose the receipt or something. At least your bank statement would have that amount of that charge, as would a credit card receipt. There's so much I want to share that I'm just trying to kind of get it articulated here. So setting up a system for yourself is huge. But again, if you're the one person show and you're out running around, running to the store, picking up parts, renting equipment and whatnot, the biggest suggestion I would get when you're on the road is to have a manila envelope or a folder in the car to tuck everything in every single day. It's really easy to forget something in your wallet. And I'm going from just my experience of having worked in the trades for quite a few years. It's just simple, easy, put it in there, put the name of the client, if you have multiple clients going on, and put it in the envelope. Because your job right now at this point is to get out and get the job done, right? The bookkeeping can come at the end of the day or after that, as long as you hang on and document all of the receipts. Another thing is always track your mileage. I'm just going to throw that out there. Just put your starting mileage and ending mileage daily and keep a calendar updated. That will be good for any kind of an audit that you have. If you're doing the same job every single day, just mark on your calendar that you're actually going there all day. This is a huge piece. A lot of audits have been happening with mileage, and mileage reimbursement, it's 0.545 cents a mile that you get written off your taxes. So that's a big one that people don't think of. And my suggestion, what I've always loved people to do is utilize credit cards. If you're small and just starting out and don't have open accounts with vendors, if they're not willing to give you 30 days terms or anything, compile things on a credit card so that when you bill your client, and by the time you get your money, then you can pay that credit card bill. It's kind of keeping the cash flow going. So that's just a little hint for just starting out that people can do. And then another thing, I never like to make a dollar go to waste. So definitely get a mileage credit card if you do that, because then you can buy business things or go on travel trips or do something like that as well on their money. To start off.
So Denise.
Yes.
So when you say a mileage credit card, that's like the credit card that we have that we gain miles for every purchase. So, so I think one of the things you're saying is, we've got this mileage credit card that we can use to buy material for our jobs, whatever we need for jobs. And then that is going to give us extra benefits later on that we can use for business expenses. Is that what you're saying?
That's exactly what I'm saying. Plus, it gives you the 30 days to be able to have to pay that bill, just like you would have open terms with any vendor. If you don't have open terms yet and you're still establishing your credit with a vendor.
Oh, so so it gives you that cash flow. It kind of acts as a go-between with the vendor. It gives you that cash flow benefit. So you're not sitting there spending all your money on materials and all of a sudden you don't have any money in case of an issue or you need to get a tool or something like that. It kind of kicks the can down the road in terms of when you have to pay and allows you to manage your cash flow a little easier.
Absolutely correct. Absolutely correct. And I can say, just from our standpoint, when I'm paying large bills on the credit card, I mean, I just had a quarter that we were charging, and I turn it and I pay it every month. But I mean, we cashed out at $1,400 because they had a special where they were doing $2 for every $1 you charged on your credit card, type of a thing, in points. So it's just a valuable, extra little discount earned, we might say.
Nice.
Yeah. But if you can, again, when you're a sole proprietor starting out and you want to establish open terms with client or with vendors, which would mean that you'd have maybe net 30 days, or some of them may do net 10, different kinds of terms. If you're establishing, they will run a credit report on you or check references. Some of them may not run a credit report, but usually they will check references. Establishing vendor relations and getting on open terms is also a huge part of your cash flow. Because as you know, you can't bill your client until the job's done and the work is done. So again, you come into that cash flow thing. So how can I extend out what I need to pay for the materials I need for a job, but I can't bill the client yet? So that's one of those kicking the can down the road a little bit to keep your cash flow going, and where you can purchase all of your materials.
I wonder if any of you who are watching right now have had that experience where you spent a bunch of the cash that you had in order to, let's say, get plants onto a site, but you still have to bill your client. So maybe you bill your client at the end of the week, but they don't pay until next week. And I think we all know where that goes, where you're have all your money out of pocket. The client isn't paying as fast as you'd like. And next thing you know, you have no cash flow to work with. So these are some tips about how to avoid that kind of problem.
Exactly. And then another thing, as you gain relationships with your clients, with your vendors, a lot of them will give you term discounts, which it's considered 2%, 10, net 30. That means if I pay my bill by the 10th of each month, I get 2% off. And one of our vendors, our stonework, gives me 3%. So that's just sheer profit that we can bring back in as a discount earned. So it's just another 3% discount, right? Also, by being in the trades, you can set up where you can get things wholesale. Generally speaking, most of the nurseries here honor it to us. Some of the bigger vendors that we use, we'll get a contractor's discount, which is huge for us in what we do. So you just have to ask. The worst they can do is say no.
Well, and I just want to add too that in some cases, you don't even need to have a contractor's license to get a discount. One of the things that I did when I first started out was, once I had a business bank account and I was able to get checks with the name of the company on it, Permaculture Artisan checks, and I had a credit card and I had my business card, and I went to the wholesale nurseries, and they just wanted to see that I was a business. They didn't care if I had a contractor's license or not. They just saw, oh, you're a legit landscape business. Cool. No problem. We're going to give you that wholesale discount. So even if we don't have the same, all the licensing and stuff, it's worth it if you have a business bank account to just go to some of these vendors and just see. Some of them might just give you the discount just because you're a business, regardless of anything else.
Great. A lot of our even hardware stores and whatnot like that, they have the credit cards that you can do where you can earn things as well, and some of them just have an open account. But I highly suggest trying to open the accounts as long as you're good at paying your bills. This is a big thing, right? You need to keep your credit in check. It's huge for the future, because if you don't, you start paying things late, that does stay on your credit. That will affect your growth in your business. Because no matter what you do, whether you need equipment or you want to open other accounts or anything you do, you need to be sure that you're keeping your credit clean and paying your bills on time. It's really critical, especially at the inception of a business. It's always important to maintain, but as you're establishing things, this is just really, I can't stress enough how important this is for you to be able to get the good deals, get the good pricing, and do all of that to gain more profit as you build your business. Any questions on any of that?
One question I have, because one of the first things you started out saying was, try not to use cash to buy stuff. Now, if folks are in a position where that's all they have, I know some students might have clients who are, say, in the cannabis industry who only pay cash or something like that. What are some best practices for if you do have a lot of cash on hand and you want to use it in your business? are there some best practices for bookkeeping and for accounting for that?
You know, I'm just going to be really upfront with how this is all going. I would deposit that cash into the bank. I would not utilize cash anymore. Oh, one little thing is the banks are actually, at least our local bank is charging us when we deposit cash. What happens is you lose sight of that cash. It's really hard to track. If you lose a receipt, like I said, it's my belief, and in my job, because I get to answer to the IRS, I get to answer to, you know, an audit and all of that above board. And really, I would keep it in the bank because it's more bookkeeping work when you're trying to spend cash and tracking that cash and doing journal entries in, unless you want to set up a petty cash fund. If you want to set it in and you're tracking that, and there's an auditing piece to it to make sure that it's all running through the books. Because usually if you're going to spend that money, it's going to be a cost of good. It's going to be something that you can write off on your taxes. But in order to do that, you have to declare the income too. So I know there are things people do out there. I don't really want to speak to it at all. My belief, I'm just going above board with everything. And I would say any cash you receive, deposit it, report it. Pay taxes on it. It's really important when you're building your business to establish that growth. Otherwise, you won't be able to get any loans. It's that catch-22. Yes, if I don't deposit the money and I don't declare income in cash, yeah, you don't pay taxes. But the other side of it is it doesn't give you a piece and show what your business is really doing for growth. So then all of a sudden you go to a bank and say, oh, well, I did $100,000 last year in installs. But you can only really show 60,000 of it because the 40,000 didn't get deposited because it was cash. You can't reflect that. So there's a lot of tracking going on now that I really try to avoid the whole cash situation. As a bookkeeper, I have to say that.
Nice. Thank you.
If you do cash, yeah, that's a whole other game. That's a whole other ball of wax. Again, because I'm looking out for growing the business. You know, it depends too on if you have employees and whatnot, or if it's just yourself, it could be a different situation, but we could always take that offline. When it comes to bookkeeping and what you need, there are two different facets that we bookkeep for. One is for Uncle Sam and tax purposes. So we report that the way we have to report it for the accountant to be able to do our tax returns. But another part of your bookkeeping would be for management reasons, right? So you can see what income you're generating, say, on pond builds or hardscapes, or, you know, if you're doing a lot of sheet mulching or whatever those facets of the work you're doing versus what you're charging. It's really important to be able to put good information into your system to be able to get out some of those managerial reports that you want. But the number one thing is obviously making sure that we are accountable to an audit and you're keeping good records for that reason. You know, we don't have to be accountants to be able to bookkeep. You know, something I learned many years ago, I have no formal education on bookkeeping. I just had very good mentors, you know, taken a few classes, but I had my own bookkeeping business for years, and people bookkeep many, many, many different ways. But it all ends up the same way on our taxes. So how we get there can look a little different and customized to our own business. The way we would bookkeep for a sole proprietor versus a corporation versus different entities looks a little bit different in setup, but ultimately we get the same numbers at the end. Some of the different areas where the big key thing is your checking account, cash. All of your tracking ends up being generated from cash. So everything you do ties into either money going in or money going out, money owed to you, money you owe out. Those are the big parameters that will tell your bookkeeping. So the biggest thing for many of you, I don't know if you're going to be doing it by hand, if you're going to be getting a software. I do want to put a little shout out to QuickBooks. Is been by far over the years the easiest software to be able to use, the most user friendly. You can simplify it. You can get elaborate if you want to. There's lots of bells and whistles that you may use, you may not use, or you may just want to hire a bookkeeper to do your books one day a week if you're small and just growing. But usually it's the setup that is important. So that being said, the software programs are set up for tax purposes, right, with your entries. There are other behind the scenes things that you can do to track some of the elements of your landscaping install or design or different. It's just going to depend on what you want to see. So we can talk about more of that maybe in session 2 if this is a desire that people have. But I just really want to throw that out there, that what you put in is what you get out. So if you just want to do bare minimal, you just want to see it for tax reasons, that's fine. You can keep your chart of accounts, which are a chart of accounts is all it contains. Let me show you, actually. I'm going to try to do this Google Share really quick and see if I can't share my screen with this. So I've kind of stripped down. Can you all see this okay? I hope.
Not yet. Try the share button, screen share button again.
There we go. Okay, let me get to the spreadsheet.
There it is.
All right. So any chart of account and anything your accountant would be looking for are kind of divided up in this little area. Again, this is getting a little bit elaborate if some of you are going to be doing it by hand and not wanting to get software yet. But these are even the buckets that you would want to hold things in. But I'm going to give a shout out. I really, really encourage everybody to get some kind of a software. So you have your checking account, which drives everything. That's where your deposits and your checks are going to be written out of. Petty cash, if you decide you want to deal with cash and have cash on hand, this is where you'd put it because you're not depositing it to your bank. There's cash that came in. It would then track where the money came from. So which client it came from. Accounts receivable, that's once you've done your invoicing, which we'll touch base on a little bit further down the road here. If you have employees, that would be employee advances. Inventory, if you keep a lot of materials on hand, you might want to use this. We don't currently use inventory on hand because we buy per job. We may have some extras here on site, but it's not enough per my accountant for us to actually have an inventory active. And then you'd have your fixed assets. So if you buy a truck or if you buy a tractor, if you buy a lawnmower, that would go under, the equipment. The benefit, if you buy something over $750, any kind of a unit, it can be depreciated, which is great because the benefit on that is if usually the first 3 years of a business, for tax purposes, you usually don't see a profit. And, my goal as a bookkeeper is always to, as much as I want to know there's a profit, I try to have as little of a profit for Uncle Sam as I can, right? Because that just means we're going to pay that many more taxes. So as a sole proprietor, there are a lot of write-offs, as Eric had mentioned earlier, that you can do that you may not know you can do. So I'm going to touch base on that just a little bit later. If you have a home office and different expenses you can track that you can actually write off on your taxes. Even any furniture, if you buy a desk, if you have to buy a new computer, any of those kind of things, if you buy them, they go here and then they can depreciate those over 3 to 5 years, depending on what the unit is. Your accountant would be able, or tax preparer would be able to tell you on that. So that means the first year, if you're small and you're not earning a lot of money, and let's say you're just breaking even, well, you don't want to be able to expense that and go into a really negative loss, right? Because there's no benefit to that. That just means it washed out the income. Well, if they depreciate it and it's a large amount and you're tracking it, they can actually depreciate it over, meaning push out the expense over 3 to 5 years, depending on the type of thing. So it lessens your tax burden. So that's the advantage and the reason we want to make sure we're tracking all of that there. And then you would have your credit cards, which is a liability. Again, you'd enter your credit card receipts into the software, or you'd track your credit card receipts. So you know how much you owe your credit card company, but you can also cost out any charges directly to a specific job. Again, we'll elaborate more of that. Always good if you can. Another option to not having a credit card would be to go to your bank and try and get a small line of credit. And that is just to keep your cash flow churning. Again, if you need to front something and get some money in the bank so you can buy $3,000 worth of materials and you only have $1,000 in the bank, you can draw from that. It's usually a lower interest than a credit card would be. Local bankers tend to be really good about doing lines of credits versus the bigger banks. So give that a whirl. But Those are pretty nice. They're really good at supporting young companies. If you're a sole proprietor, that's where you're going to see these equity accounts. If for tax purposes, if you take draws or you buy something for your personal use when out of the business account, which, oh, by the way, I highly, highly, highly suggest and really cannot say it enough, open up a separate checking account. Do not blend a lot of your personal expenses with your business expenses. It just will keep your cash flow right. Pull a draw out of your business so you can really see what your business is doing. Try not to commingle too much. You're better off to pull $1,000 out, right, transfer money over to your personal checking account or something than starting to commingle too much of your personal stuff into your business checking account. So if you did take a draw from the company, that's where you would put it, would be on your balance sheet, because it's not affecting your profit and loss. You're just taking equity out of the business, meaning of that. So say you had $10,000 in revenue, your cost of goods and expenses were $5,000. You have $5,000 left of a profit. That's still the profit. It wouldn't affect the profit because you're taking it out of the equity of that profit, if that makes sense. And then you have different streams of income. And this, again, it would depend on, it can collapse and they just report it as income on your tax return. However, you may want to see how many different facets of your business are creating what kind of income. So we have ours broken down here. I kind of stripped it down a little bit. We consults. I want to be able to see how much revenue we're driving and bringing in for consultations. Same thing with landscape design, landscape installation. We have landscape maintenance. Management services has to do with the different entities of businesses we have here. And then consultation credit, it decreases my income because we credit back. If we do a consult with a company, with a customer, and they spend over $3,500, we will then credit their consultation fee back to that job. So they get that right back. So therefore their consultation ended up being free and going towards the work performed. And then of course, any kind of, if say a client wasn't happy with something, or we decided we wanted to give a discount to a client because they've done something, they've done a lot of business or whatever the case may be, or maybe they were dissatisfied, that also decreases your income if we credit it back. I still want to be able to show and invoice my client, say the $5,000 work we did, we generated that revenue, but then I want to track how many dissatisfied clients or how many credits did I get back or how many donations of our services did we do. That's going to go in there. So it just gives me a snapshot from a management standpoint. Again, the accountant will collapse all of those income sources, and it's just one line item on the tax return. So the rest is just managerial to see to help manage the business.
But one thing that you're showing us, which is so great, is that by breaking things down into these different categories, we can get a snapshot of so many things: where money's coming in, where it's going. We can unveil patterns in permaculture design. When we're reading a landscape, we're always looking for those patterns and then reading patterns to understand how the system's functioning. Where is it weak? Where are the connections that are missing? And this is the same thing if you set up your company in such a way where you can understand and read all the various patterns that are going on with the different facets of your business. Then that gives you the data, the assessment, the analysis that allows you to make the appropriate tweaks or know when you need to cut something off or invest more into a particular aspect. So that's really cool that, with this level of breakdown, how that helps with the management side.
Yep. Oh, and I don't know if you'll notice on the left there, seeing how number 26 to 50 is all hidden. Well, I collapsed this because so you could kind of see the subcategories. Well, I'm a dork. I like to see my information. So if I go and unhide all of these rows, you're going to see what I'm tracking.
Yeah, let's see that. Oh, yeah.
Okay. So I want to see those different areas of what we're billing. And then it's going to be the same thing down here. For any income account I have, I want to see what my expenses are against it too. So again, I have to be careful when I'm inputting, but if I come down here between 54 and 87, And I go unhide. There we go. There's all the offsets, my cost of goods against my income. So I can run a report and actually do some analysis to see, okay, well, carpentry income, I had, $5,000, but my expenses were $4,000. Ooh, we're only making $1,000 there. Where are we going wrong? What pricing do we need to change? There's a whole lot of analysis we can do. But again, it means being careful on the input as well as a bookkeeper, because it's only going to be as good as I put it in. It's going to be the information coming right back out.
Really good point. This is like, it's like the map of the company. That, like we talk about creating digital base maps of landscapes so that we can understand where things are and what the connections, relationships are. And this is more in this, in the background map of the going ons of the company. And just, Denise, give us a breakdown. What does it mean when we say cost of goods sold? Because that's an important accounting jargon that we throw around, but I remember it took me a couple of years to kind of like grasp like what that really means. And I think it's great to see this, that we have income and then we have cost of goods sold, and one is the money coming in within these different categories, whether it's planting seeds, income from planting and seeds, income from ponds and waterfalls, income from project management, and then we have cost of goods sold. So what is that exactly?
So a cost of goods sold is anything that is directly related or directly a direct cost to an income level. So there are cost of goods, and then there are expenses, which are considered overhead expenses. Overhead expenses, it's easier for me to go backwards on this. Overhead expenses would be what it would cost me to run a business, whether I did or did not have client John Smith as my client. So I need to pay rent. I need to pay the phone bills. I need to, wage office staff usually are not a direct cost of good. Usually office staff would be administrative. Like I'm not a cost of good. I'm an expense. Let's see, advertising, which we're going to go down there. Those are expenses that it doesn't matter if Joe Blow is my client or not. But now I'm going and I'm buying something to build the waterfall. So I have an expense that's directly going against a job that we're doing, or I'm renting a piece of equipment for this job site, specifically for Joe's job. I'm having to haul trash from Joe's job site. That dump trip is a cost of good. Small tools. If I'm on a job site and I break a hammer and I need to go buy another hammer for that job in order to complete that job, that is a cost of good. A lot of people expense that, but the difference of a cost of good versus an expense, cost of goods get taken from a tax standpoint right away from your income. So if I have $10,000 worth of income and I have $4,500 of cost of goods and then another $3,000 of just expenses, there's only a portion of the expenses that get to be written off. They don't get written off at 100%. Cost of goods decreases your revenue or your income directly. So if I had the $10,000 income, $5,000 cost of good, really it's dropped it down to I only have $5,000 on that job. And then the expenses get written off by certain percentages, depending on which tax code. I'm not 100% up on that right now, what the percentages are, but like I know some of the office supplies can be written off at 50% on your tax return at different percentages. So it's good to keep as much as you can directly related to a job. Keep that name on that job. Make good little notations on the actual receipt in case of an audit, and this would go in a cost of good.
Oh, that's such a pro tip right there. To do that. I wonder how many folks are expensing items, putting them in the wrong category rather than a cost of good as a per project, and then getting hit with the extra taxes on that. So that's really big. So just a quick recap for everybody. So basically what we're saying is that cost of good, that the costs of goods sold, is a cost directly related to a project. So the materials or whatever, and that comes directly out of your directly out of your profit. So you're going to get the best possible tax liability on the cost of goods sold.
Yes. Yes. And something I would share, because I know we were dealing with people, in different states too. State tax benefits or tax codes are different by state, but the federal is the biggest one that usually most of us have the highest tax burden to do. What I did and what I've done for clients is I've gone online and printed out just a blank Schedule C form. You can go onto the IRS form, and that will help you understand also a little bit of the buckets that you get to write off on taxes, the big boys. It's really interesting. At the very top, there'll be one line that'll say total revenue. And then the next line right below that will say, maybe it's 2 lines down, don't quote me on that one, but it will say cost of goods. And then it will have a gross or net revenue. And then from there, you get all of your other expenses that you put buckets, and then there's a percentage, and they come up with this beautiful figure. And then it gets taken off of your total, and then you'll get your net income, if that makes sense. But it gives you like the advertising, the different things that are directly write-offable, if that's a word, it'll show you. So if you get a chance, pull up a Schedule C from the IRS, and that's the business snapshot that would then get attached to your personal return. So if you're have another job and you're building your business on the side, your business would have a Schedule C that would get attached to your 1040 for your tax return. So those of you that maybe are single and have always been able to do a 1040 easy, well, now that you're starting your business, those days are over. Now you get to do a Schedule C with your tax return.
And let me just say, if you're listening to this and you feel a little bit lost by the different forms and stuff, you'll understand when you go to do your taxes, you work with your accountant, work with your bookkeeper. I mean, a lot of it goes over my head as well, but these are important pieces. And if you're not in the United States and you're in, Canada or Spain or the UK or wherever you might be, then just a lot of this still applies to how you want to track and input all your different your expenses, your cost of goods sold, your income. You still want to do all of this, but then when you get down to doing your taxes in the country that you're in, obviously there's going to be some differences there. So like Denise said, always talk to an accountant and get their advice on exactly how to set it up. But I will say that having it set up like this, having the way Denise sets this all up, that the cost of my accountant has gone way down because of just how well put together and organized Denise has all of our books. And then we're just paying a nominal fee for the accountants to consult with them a little bit and to actually do our taxes at the end of the year. So all of that is just to say, obviously get the input of an accountant through the process, but the more that you can have this organized, you're going to be paying a lot less to an accountant. Accountants are pretty expensive. So getting a bookkeeper, Denise mentioned that, if you're starting out, you're small, maybe even just 1 day a week or half a day a week, have a bookkeeper come. But if you're running your business, you're going to want to know and understand how to track stuff, because you're probably the one spending the money. So you're going to really want to know how to track these things to make it easier for yourself later down the line.
Yep, absolutely, Eric. And I can say, over the years in bookkeeping and different clients I've had, I mean, when you're starting out, here's the worst case scenario, but it's doable. Again, if you just keep putting things in a manila envelope, even for the month, and don't want to input a lot of it. Well, if you have bills to pay, but your receipts and stuff, at least keep it all together. That's worst case scenario, but at least keep it all together. So you have month by month, so that if you do have to have a bookkeeper or somebody help you put this all together as you're starting out, until maybe you've bought your software or something like that, it's going to be a lot easier to input, as long as you have written down names on your receipts, so you remember which job it came from or who it was for. And that's something the IRS is going to look at too, if you ever do get audited. I mean, I love an audit, like bring it on. you know, I'm a dork when it comes to that. I know I don't look good in orange, so I always make sure I have everything documented and, you know, and backing it up. But yet, you know, I'm kind of a bold, I push the limits a little bit. But even if you do something wrong with your bookkeeping, like let's say I was putting an expense in the wrong place and I didn't know any better and I got audited, as long as you're doing it the same way wrong the whole time, there's an explanation for it, right? So you can stand up behind it. So there you go. Worst case scenario.
Real quick, Denise, scroll back up to these income columns.
Mm-hmm.
There. So I just want to, these landscape installation. So there's just a view of a permaculture installation company and the different buckets we have. I mean, we have the carpentry, we've got erosion control, drainage, grading and excavating, which is where a lot of our surface water management comes into play, swales and rain gardens and things like that. Gray water systems, hardscapes, of course. Then we've got irrigation. We've got planting and seeds. We've got water features through the ponds and waterfalls. We've got sheet mulching, soil amendments. Oh, it looks like you have a stormwater management item in of itself. So I just, we scroll down just a little bit more so we can see that. So, we got water catchment, rain catchment. We've got tree work. So I just wanted to, that's like kind of a snapshot of all of the various different services that Permaculture Artisans provides our clientele. And it's really nice to be able to break it up this far, like to break stormwater management up from water catchment, rainwater, to break tree work out from planting and seeds. To be able to break things down in this way really gives you a tracking the possibility of tracking all these things separately when you're doing these on different projects. Because obviously some projects might have almost all of these items in one project if it's a really big project. Other projects, you might only be doing stormwater management. But whatever it is, being able to break things down like this rather than keep things kind of under bigger umbrellas will really, really help you to understand. It might be shocking to you when you start to break things down to realize that, oh, I'm actually irrigation is an area that I'm making no money ever. And that might have gone missing because you kept it inside a landscape installation line item. And so it just got mixed up with the planting and the sheet mulching and stuff. But maybe you're losing out on irrigation and you need to up your pricing or be more efficient. So I think it's really cool to be able to see that much diversity of services and to be able to track the income within each one, which really, again, this is that permaculture principle of observation, of assessment, of site assessment. We're doing an internal business assessment of our services and whether they're actually working out for the company and for the clients. So, it's just really cool to be able to see it broken down like that.
Yep. And then when my accountant sees it, so like Eric was just saying, that's all management. But when my accountant sees it, he's going to see this all collapsed. All he's going to see is this one line item income. That's all he cares about. That's all he needs. We can collapse everything else, which again, that's a whole different term, but he doesn't care about any of this. This is all for us in our business management. That kind of ties back to, it took me a little bit to get it set up to where, remember how I was saying good information in, good information out, right? Well, like Eric said, if we're estimating something and we're doing planting and then we have irrigation tied into that same scope in our estimate that we give to our client, and that's how my crew are tracking it, it is going to be combined. So that's where I've asked them to get more granular too, so that I can kind of see, not all the time, but I want to be able to do snapshots because we've been doing analysis over the last year. To really separate it out. And I'm having them really elaborate on their timesheets a little bit more. Okay, did you spend 4 hours in this area or 8 hours, so that I can track it even from the wage standpoint, which is really important. Again, the government doesn't care. I do, if we want to make these areas grow, or the business owner would care. So you can tell that I pretty much have matched this up for income versus the cost of goods. I have duplicate accounts on each one. So another thing that's a cost of good is crew wages and their workers' comp insurance and their payroll tax. That's all a cost of good when they're working on a job site. If they take vacation or something like that, that's actually an overhead expense. But if they're working directly for the income that we're going to invoice a client, that is then considered also a cost of good. So now 100% of my wages are getting written off, and the payroll tax and the workers' comp for my for the crew and designers, the designers too, because I'm billing clients out for design work that is directly related. They do track by client what scope of work within a design contract that they're doing. So I have that granular too, actually, behind the scenes. Which that is down here. Here's some more cost of goods. You can see, again, they just want, the government would only want to see wages. That's all they care about. But, you know, as far as they wouldn't want, I collapsed some stuff here too. Let me show you also how I have this. I want to know what we're spending on consult wages. So if we're doing, you know, by the time they drive to a consult, we bill the client, so we can only bill them for an hour, but it takes me an extra half hour to get them there. I want to see really what our cost is against the income account I have above for the consult, because those are direct costs to be able to go do that consult. Same thing, design, installation. We have a maintenance division that I track our maintenance clients, different than I track our installation clients. That all ties back to invoicing, which I think that's going to be our next training session. I can get pretty detailed on invoicing. And like I said, the workers' compensation. So again, this is cost of good directly relating to an installation job, but yet you're going to have it if you have administrative people, like if you have an office manager or somebody else working for you, that is an overhead expense. So that's that difference. They're not working for a specific job. They're not doing something that's not a cost of good. It's an overhead expense. The difference between small tools here versus there can be tools also as an expense. Small tools that you're utilizing and having to buy directly for a client's job can go build directly against that job. You may use it later on down the road for something else, but if you broke one at a job and you're replacing it for a job, then that's a little aggressive on that one. Subcontractors, if I sub something out to somebody, again, I have an income account up above and I have an expense account down here. That is a direct cost against that job. And same thing now, travel. So there's two different things on travel that I want you to be really aware of. Travel between jobs is a cost of good, but if it's a commute, if you go from home to a job site and from the job site home, that's considered your commute. You can't write that off. But if you're going in between jobs from one client to another client, or you're driving to go to like say a hardware store to get parts for that actual job, you can write that off as a cost of good. Any questions on cost of goods before I go any further? Oops, I guess I should go to the Hangout part, huh? Okay. Oops, I just lost my spot. Sorry.
That's okay. It gets a little confusing with all the different just hit stop sharing. There you go. Yeah.
Okay.
Hey,
so
there we are.
Sorry, guys.
I think just keep going. My sense is that folks are taking this in. If you have questions, go ahead and throw them up there in the chat window. I know that this is some pretty deep, dense stuff, you know, and for those of you who aren't used to hearing, you know, bookkeeper language and stuff like that, some of it might go a little over your head, but I really suggest you come back to this when you start to develop the bookkeeping for a project or for your business. You can come back. This video will be uploaded in the student portal in Teachable, so you can come back anytime and really look at the way all this is broken down, the way Denise is sharing this with us, and you can copy and tweak it for your own needs and uses. And then we're still going here for a bit, but we will be doing 3 sessions on bookkeeping. So if questions come up from this video and you feel a little bit lost, we'll bring your questions next month to next month's bookkeeping bookkeeping, landscape bookkeeping 2.0, and then we can take up more there. So back to you, Denise.
Great, thanks. And the biggest thing I wanted to do on this first training was just kind of give you plant little seeds of things you may not have even known that you didn't know. Kind of, we don't know what we don't know to know. It's one of those things. So I'm planting a lot of seeds because a lot of people don't know that certain things can be written off. And I just really want to plant the seed now before we go into, as Eric said, more hands-on, day-to-day, what you're going to need to know with your bookkeeping. So down to expenses. On to the next part. Any advertising that you do, if you print yourself up some business cards, or if you put a logo on your car. So if you have your business name on your car, that is now a company car. You can write that off when you have that on your car. So just a little tidbit there. Amortization expense, that comes from my CPA. Bad debts, that's if you're home. Yeah, we'll touch base on that because that can get a little more detailed. You put bad debt on uncollected income that you've already paid taxes on. You could put that there so you can track it. But up above, before, when we were doing the income and I had that quality assurance and some of those discounts I gave there, that's another spot depending on the detail or the explanation of what that bad debt is. So that's, talk to your accountant on that one. Bank fees, if you pay a service fee to your banks every month, you get to write that off. If you have to buy books to learn something or anything educational, resources or anything, that is a tax write-off. Computer expense. Now, this would be for your small items. If you have to buy a computer or a printer or something like that, and it's over $750, or check with your state and see what that threshold is, you'd want to put it in another spot, which I'll explain down the road. But I talked about it earlier, where it's actually an asset that they can depreciate. So you can take the business loss over a series of years. But small things like printer, ink, and paper, or that kind of stuff would go here in computer expense. Continuing education, that would be if you need to go take a seminar or take the ELM class, right? That's continuing education. You can write that off. Depreciation expense comes from the CPA. Dues and subscriptions. Even if you buy permaculture magazines.
Wait, Denise,
Yeah.
So people can write off the taking of this course.
Yep. This is a tax you can write off as continuing education that you're taking a course. This is continued education.
So that would be the label that you would use when in your bookkeeping is continued education, and then you can use it as a write-off.
Yes. Yes.
Hear that, everyone? Make sure you do that this year.
Yeah, that's a big one. Or, business development. I mean, I've heard different people use different verbiage, different accountants, different companies have used different things. I have always used continuing education as the source that I write off any classes I take, any seminars, anything would just be continuing education. Yep, it's tax deductible.
We've got to put that on the marketing, our marketing materials.
That's right. That's right. It's huge. It's huge. Okay. So dues and subscriptions, kind of talked a little bit about what that would be. That could even be,
are you wanting to share your screen, Denise? Are you
am I not sharing it?
No.
Sorry, guys. I thought I was sharing.
That's okay. We get to see your lovely face.
Oh boy. Oh, that whole time. Sorry, guys.
I know, it's great.
Okay, so depreciation.
Okay, so here we are on expenses. Gotcha. Oh, so there's the continuing education line item.
Yes, right there.
Gotcha.
Boy, sorry guys, I'm not that techie.
Oh, you're good. Not that techie. You operate QuickBooks. Jeez.
This is true. This is my favorite. I'm kind of a geek when it comes to QuickBooks and figuring out things and analyzing. I love that kind of stuff. I love
look for geeks like Denise, people.
Yeah, it's fun. It's fun. Employee meals, I track that. The accountant tends to put this under business meetings and entertainment. I like it here because I like to track it. So again, this is more of a management thing that I need. My accountant always moves it, but I like to see it that way. So I keep it there. Gifts would be like if I buy my clients at the end of our projects, we like to give our clients some kind of a thank you gift. It goes there. Or if a vendor has done something, given us a great deal and we want to do something for him special and I buy him something or a gift card or something like that, that goes there. Insurance, you can see that there's some missing rows there. There's all kinds of insurance that we get to see. We have our auto and equipment insurance, which that's really important, which we should touch base on. But if you have any equipment, you want to make sure that, especially if you have your logo on the side of your business and stuff too, you want to make sure that you're having some business auto insurance. But that can be down the pike. We have a commercial umbrella policy here. We do have multiple businesses going on, so we want to make sure we're protected. Disability insurance. And then liability insurance is the big boy. That's something you definitely want to make sure you have. If something happens on a job site, or somebody falls at your office or meeting with a client or something, you always want to make sure you have your insurance. That's huge. And shop that. You'll be amazed at how different the rates can be. So you want to shop that. Workers' compensation insurance is probably the most expensive insurance we carry, especially in the landscape industry, but you don't have to worry about that until you have employees. So if you don't have employees, workers' comp is not something you need to worry about at this time. And then interest expense. So when you utilize that credit card and you want to gain mileage rewards or whatever, or if you ever don't make that full payment, you have interest expenses. Yes, you can write that off. Again, I don't believe it's 100%. I don't remember what the percentage is, but you can write that off. And this is a main category. And I have other accounts that I deleted off here. I have a line of credit. So sometimes I have to pay interest on a line of credit. I like to be able to see what it's costing me to do that. So that's an analysis thing for me, not for the accountant, versus my loans right here. Internet service provider, internet and emails, you can write that off. Licenses and permits, that would be like, let's say you do get your contracting license, or you have to get your business license, or you need a permit for the area that you're doing your installation in. Here in California, we have to have business licenses in any city that we're doing installations at. So, they can range anywhere from $50 to $100. So you can write that off. This loss or gain on sale of fixed asset, that's an accountant thing. He gives me that entry at the end of the year. Meetings and entertainment, that's if you take a client to lunch, or you take maybe a potential staff somebody that you want to hire out, or you take them to a cup of coffee or something, or you have a company party, that's where you'd write that off. Mileage reimbursement, this is if you have employees. So like I run to the bank every day and run to the post office every day, and I use my own personal vehicle. I don't use the company card. I track my mileage. I then get reimbursed for my mileage. That's what that would be, versus travel on the job. We talked about earlier up in the cost of goods. That is directly related to getting between jobs, traveling between jobs. That is actually directly related by our crew for that job. So two different entities. Office supplies, this is always just a bookkeeper's big bucket. This would be technically for office supplies, yes, definitely, or cleaning supplies. Those little incidentals that you just need to buy, that's a nice little bucket place for those.
So paper clips. Just going back to the mileage reimbursement again. So that's like you going to the office supply store rather than, say, one of our foremen going to the nursery. Exactly. Okay.
Yes, because we have somebody to invoice and earn income off of him going to that hardware store, right?
So then that would be a cost of goods sold?
Correct.
Gotcha.
Correct.
Okay. But here is just a mileage reimbursement when somebody is running an errand, a business-related errand that isn't tied directly to a project.
Exactly. Great question. Exactly.
Yeah. Cool.
Yes.
Okay.
Yes. And that mileage reimbursement is, again, every year it can change. It can change multiple times in a year. It is a federal mandated, or state, mandated amount. So it was last year 0.545 cents per mile, or 0.535. Now it's 0.545 this year. So if you're doing that with anybody, reimbursing somebody besides yourself, you want to make sure you're reimbursing the correct amount. It's a quick Google. Outside services, that again, I collapsed it here. I'll kind of show you what I collapsed. We have different things that we would do. These are business professionals for overhead versus, don't be confused when I look at these subcontractors. If we look up at cost of goods, we had subcontractors up here. Oh, I hit them right here too. Sorry. Let me unhide them here. So I have subcontractors, people that are not my staff, that we bring in and contract out for these different kinds of work here, right? So I'm not paying payroll taxes on them. I'm not paying workers' comp on them. I'm not doing anything on any of these subcontractors because and this is relating directly to a job. That's my cost of goods subcontractors. Down here, where I had the subcontractors, you can notice these are business type of contractors. So this has to do with me operating this business on site that I would do, whether I did or did not have a client, it would still need to be done. So like, go ahead.
So fixing the computer when it crashes, the payroll service. So things like that, not connected to any project that we're working on, but just when we need to bring someone in to help us with something on the back end of the business, this is what these subcontractors are.
Exactly.
Gotcha.
Exactly. You can see my accountant there, computer tech, person that comes in, fixes my computers or whatever he's doing here. Consulting, this can be a business consultant. You know, I think you all know we utilize Lyft. So this is where I would pay them out of, their consultants. Legal fees, thank God I've not had to utilize that code. Payroll service, I have a company that I report into with all of my actual payroll. So they cut the checks and they make my quarterly payments for me and do the returns. However, I still have input on my side. So I don't want you to think that just because somebody else does your payroll, you would still have entry to do, just much more minimal in your software when you have employees. Again, that's down the pike when you have employees. Pest control would be here on site at the office. And professional fees, that can be a gamut of different types of professionals that I may have that I didn't feel like I needed to isolate it. So it's my little bucket that would be anybody that aren't these other items. I can always run a report, by the way. That's the beauty of software. If I wanted to see who those people are that those numbers came, I could drill backwards and see where every dime I spent in this area came from.
So one question is, well, two questions. Question one is, when payroll service, I know that there's, debates out there about, do we hire folks for payroll to do payroll for us or not? But what is the benefit of having a payroll service rather than just doing it all yourself?
Well, there's huge benefits, and then there's one disadvantage, and only one disadvantage I've ever seen. The advantage to it is they are up on all of the new payroll tax codes, the payroll reporting that needs to be done, the payroll deposits. They have the software behind them that will automate a lot of these things and track things. They process the W-2s for the end of the year for your employees. They submit all your quarterly reportings. If you have a new hire, there are different forms that need to be submitted to the government with a new employee. They've really initiated a lot the last probably decade. And a lot of that had to do with spousal support and collections and stuff. So as soon as you hire a person, there's a new hire report that needs to be submitted. Your year-end reports and reconciliations, they handle all of that, which it can be pretty laborious doing a lot of that. So I can tell you, I have 15 staff on the Permaculture Artisans side, and it's running me maybe $250 a month for all of it. It's, again, I do have time that I have to input some of it to be able to do my billing. But as a bookkeeper, that is my biggest fear, is missing a tax deposit. Because if you miss a tax deposit, the penalties are huge. So it's really nice. I love it. Again, it depends. I mean, most of the payroll companies out there, I've not had a bad payroll company. I've worked with many different ones with many different clients, and they're worth every dollar.
Yeah, exactly. One other question, Denise, is it possible for us to get a version of this spreadsheet in a way where we can upload it to the student portal for people?
Sure. Yeah, we can
Cool.
actually take this document right here. Because what I did,
Perfect.
I took this, actually, I ran a report in my QuickBooks, and there's a tool where you can just export anything to Excel. So I just exported it and just customized and hit a few things and did that. So absolutely.
Oh, great. I think folks will really get a benefit out of that. Some folks are having a hard time seeing your screen, and who know, it looks fine to me, but just if people are having a hard time seeing it, it'll be super helpful to be able to share this with everyone. So thank you for that.
Absolutely. More than happy to. So the payroll, I was talking about the disadvantage. The
Yeah.
only disadvantage with using a payroll company is, but it's actually really, really, really good. They collect all of the payroll taxes that have been withheld from your employee, as well as the matching part that an employer is responsible for payroll taxes, which it totals up to about 15% of the wages between the two. Well, they pull that money the day of payroll, and they hold it and then make your tax deposit that may not, depending on what kind of a company, how many employees, it may not be due till the 15th of the following month. So it can be a cash flow. A lot of companies use that as a little bit of a cash flow crunch, but then come the 15th of the next month, you need to have that money, so people scramble and don't have the money. I like to know that it's debt. I know I have it. They take it all now. I don't have to worry about it next month. It's just taken care of. But that is a little bit of a cash flow reprieve you can get if you're doing payroll yourself.
I'm glad you mentioned that, because I actually remember that happening a few times and it drove me crazy.
Yeah. I have a friend of mine who just called me probably a couple months ago saying, I don't know what happened, but all of a sudden I have this collection and they're saying I owe $12,000 in payroll taxes. What is this? Well, she didn't know. She was withholding all this money and she hadn't been making her payroll deposits for her 2 staff. I mean, just not knowing.
Oh man.
Yeah. And all of a sudden trying to come up with that money. So somebody else doing it and it's just automatic. It's, out of sight, out of mind, because you owe it.
Yeah.
And the half of it that you're withholding from an employee, that's really not your money anyway. That person earned that money. You're paying it on their behalf. So, but it's always nice to kind of have that cash flow. Okay, so down here, see this payroll salary expense and payroll tax expense. There are 2 items down here versus up above in the cost of goods. We had wages. And again, the cost of good wages were directly against a job that you're doing. These payroll salary expenses, administrative salaries. So like myself, and we have a couple other people here in the office that don't work directly with any one given client, we're considered administrative overhead. And then I also track, we give some paid time off to our employees. And, or if like they say they're not working on a job and I have a big staff meeting here at the office, I code it different so I can see what is administrative overhead. What does it cost me to run our business, whether we did have that client or didn't have that client. So I divide that up here. Postage and delivery, that's pretty obvious there. Printing and reproduction, just if you have to go outside and do copies or something like that, that would be outside printing. Usually if we have a copy machine in the house, you wouldn't put it there. Refuse and hauling, that would be if I had something here on my workplace that I needed a dumpster taken away or something like that. That's an old one. I personally never used that account since I've been here, but it's there. Rent, we do pay office rent. Rental fee would be like if we went to have a party somewhere or did something. Again, I've never used that code, but it's there. I've just never hidden it. Repairs and maintenance, I've hidden a few things. There's a few different areas that you want to track with your repair and maintenance. Here at my office, I want to know how much am I spending a year or a month on office landscaping to keep our office looking beautiful versus what am I having to actually repair and fix. This is for me to be able to budget. Why I break it down this budget. Okay, it looks like we're spending $1,000 a year. So I need to make sure in my cash flow, I'm accounting for that. We have different equipment that we may need to repair. I like to track that. Again, these are all tax write-offs, but I like to expand it. Security service, that would be, we have an alarm here on the office. That's what that is. And then your taxes, you have different types of taxes you may need to do. We have property taxes, which we do, well, actually, yeah, property tax would be personal property taxes. So there's a business entity on your, that's a whole other conversation, but there is a different kind of a tax that you have to pay that's called property tax when you own equipment and have an office set up, at least here in California. Sales and use tax, I've never had to utilize that. But a lot of times if you're leasing equipment, the sales and use tax on a lease, you would be able to plug in here as sales and use tax. Your telephone, you know, we have different phones, so I like to track what I'm spending on cell phones versus just our office line. Travel, I hit a few things, but the government would always want to, actually, you do want to track this. I should keep these unhidden. When you have travel, you can write off your airfare. Again, this has to be business related. So, like my suggestion, if you go out to dinner and you're even with friends and you're talking about your business, even though you're not selling your business, write those people's names down that you had dinner with. Make sure you have a calendar that has that person's name on your calendar that shows you we're having dinner with it. More is better. Hang on to this receipt. You can get a little aggressive with your CPA.
Yeah, sometimes just going out to dinner with my wife, Lauren, will spend the entire dinner talking about business. And they're like, wait a second, we just spent 2 hours in a business meeting. I think this is worthy of a write-off for this time that we spent. So good to keep that in mind. And then I also wanted to say for travel, like if people are going to conferences, like say someone goes to a permaculture conference, would that count as a business write-off for travel?
Absolutely. Absolutely. So if you're going to a conference, there's going to be a couple elements, right? I would put the tuition you're paying for the conference, that would be a continuing education expense. But in order to get there, you want to be able to track, did you have to fly? Did you have to drive? If you had to drive, are you renting a car or are you using your own car? What was the mileage? You know, or fill up with gas, get a receipt to get reimbursed. Definitely write-offable. Your hotel stay, you definitely write it off. Meals, keep your receipts and keep them noted. You want to note that they were conference receipts. There is a per diem that you can write off of meals per day. I don't know the exact particulars. My accountant handles that, but just detailed, make sure all of this is on a calendar, as well as you're writing down on the receipt where you're going. If you ever get audited, that's the trail they're going to go back to. So if you want to be an aggressive, aggressive with your write-offs, just make sure you have your more is better. That's the biggest thing I can say. Yeah, travel transportation. So if you have to take an Uber or if you're tipping a taxi, make sure you get the receipt. They will all give you receipts. Get the receipt. Or if you send an employee, an employee can actually give those to you and you can reimburse your employee too. Then they would not be able to write it off on their taxes. You would write it off as on your taxes.
So Denise, what about for folks? I know you're saying you have it on the calendar, have as much of a paper trail as possible, but I'm just curious. Some people might be listening to this and think, oh shoot, last month I went to that event. I didn't realize I could have written that stuff off. Maybe they saved some receipts, or maybe they have an email receipt. Is there anything retroactively folks might be able to do if they realize that they kind of, missed out on something they did recently? What kind of retroactive stuff can people do if they miss their chance on something?
You can always go backwards and recreate. Like you said, absolutely. Again, this is where I say don't use cash, right? Because you can go back to your credit card or your debit card or whatever. If you're paying for some of those things, I would just, if you don't even have the receipt, right? You have a bank statement or credit card charge, whether it's personal or whatever, I would highlight it. And if you had an itinerary, or if you can go back online and do a screenshot of something, or just get a piece of paper and make a notation, receipt not kept, date it and say what it was for, what you did. Just write a little summary so you have something written and a reasoning why, if you ever get audited, of what that was for. And usually if you have something, they don't think that you're just, writing off everything, but you've actually taken the time to write something down like that. it's usually more acceptable from an audit.
Great.
But yeah, I've had
you.
clients go back a year, you know, and say, oh, shoot, I forgot about this, this, and this. It's like, well, just do a write-up, have something in there, because you can get audited going back 7 years, right? So just write up something, because you won't remember next year. So, and again, audits are very, very low these days, at least here in California. But it's just, you know, just make a little note. It doesn't have to be anything elegant, anything pretty. It can be on a little small piece of scratch paper and just put it in with that month's receipts, or however, whatever filing system you decide to do, which we will talk about a little more the next session. But just hang on to it. I learned when I was self-employed, you know, I didn't get rid of any receipts. I would make notes on things that I knew were directly related. But even my personal receipts, I've always had myself a big manila envelope, and I put January receipts, and I would keep my personal stuff even in that receipt. And then depending on end of tax year, and if my profit was looking a little bit much, I'd talk to my accountant and say, okay, boy, I know I talked about business at a lot more meals than that. So, you know, you just, more is better. Utilities, that would be, you know, like my water, garbage, all of that type of thing. Again, these are all things that we can write off on our taxes. Vehicle expense, that would be, if you need to get fuel, you can expense fuel. I hit a bunch of things here too. I didn't want to overwhelm you guys just taking the first gander at this. But we have different vehicles, and I like to track what my expenses are per vehicle, fuel and whatnot. So up here we have our fuel by a couple of our different vehicles. And then we have truck repairs and maintenance directly to a vehicle. And then I have my vehicle registration. Again, I break it down because I do a cash flow forecast, you know, say, okay, the Prius, the registration is $200 each year, it decreases a little bit. Next year, I need to make sure in October I have this much cash flow. It just helps me plan from a cash standpoint, which you can write off. A lot of the registration is you can write off. Each state has a different write-off that you can do. So just that is definitely a receipt you want to make sure you keep as the bill for your DMV. Your CPA will probably ask for that. Work clothes and gear and safety equipment. This would be for like the gloves for the crew, safety goggles, logo shirts that we do for them. And that's kind of crossover. We could do that to advertising also. Talk to your CPA, see what the best write-off would be. But I lump everything in here. Earplugs, all that stuff. I have this beautiful account I've always called unclassified. Most software companies have a built-in one called Ask My Accountant. And that's kind of when I'm inputting things and I'm not quite sure where to put it. If I'm writing a check, I'll stick it there. If I can't think of it at the moment, I stick it there. And I know that number needs to be empty at the end of the month or the year, whatever reporting cycle I'm on. But it's my catch-all if I need to go back and do some research or figure out, well, gee, where did I put this before? It's just kind of a little holding account, I like to say. And then some of these other things just are automatic in the software too. Discounts earned. I was talking earlier about if I get to take a discount because I have a terms with one of my vendors that I can pay it in 30 days. But if I pay it in 10 days, I get 2% off. The software program actually has a feature I can utilize, and that shows that I have a little bit of earned income by saving money from paying early. And then this is a CPA account, the gain on sale of equipment. Interest income, we don't really have a lot of interest income. If you have a savings account, you may get some business income or business interest from there. That's about it. And then other income, that would be if, like, let's say somebody came in and bought a little something from me that I had expensed last year, that it wasn't a big piece of equipment or something, and it's not an installation or maintenance income. It's something way offbeat. It would go there.
So that's like stock material, like leftover irrigation supplies that we've now used for a client, or?
Yeah, you can put it there, but no, this would be more like, remember when we had sheep here on the land and you got rid of the sheep, or, you know, I'm just teasing hypothetical. It would be just something odd. Or if I sold a desk that, you know, I spent $200 on and I decided to get rid of it and someone decided to buy the office desk from me and I have to put the money in the bank, that's where I'd put it.
Gotcha. Right. You sell off some tools because you don't, you know, you're going to upgrade and you sell the older ones or something like that.
Right.
So for the last 10 minutes, we've got 10 minutes left. Any last important piece on this before we wrap it up?
You know, I think, again, I know this is probably overwhelming for many of you. Again, I'm trying to plant some seeds of what the different facets are that you can write off. One big thing that doesn't reflect on a business profit and loss, but it is really important for record keeping for those of you who have home offices. Again, the regulations can change state by state, but I know for the federal, it's standard. If you have an office in your home, you can write off part of, whether it be your rent or your mortgage, your utilities, for any of the space that you're utilizing for your business and directly relating to your business. So say your house is 2,000 square feet and you're using one room as your office. And then say you're even using a space out in your yard to store your equipment and different things. You get to take that square footage and write that off. You take the square footage and come up with a percentage of your whole household or your property. Say it's 25% of the square footage that you're utilizing for business. Well, you get to write 25% off of your rent or your mortgage. You get to write 25% off of the utilities you need to utilize in order to run that business. You may not be paying those bills out of your business account, which I would highly guarantee don't do that, but you want to keep track of it for your CPA at the end of the year, because that is a huge write-off for people that a lot of people are not aware that you can do that. So that's just a little side note.
Denise, let's see you again. Can you stop, yeah, cool. Hey.
Hi there.
I wanted to build on what Denise just said about writing off your office stuff. And I'll be brief here, 5 minutes, and then we'll wrap it up with Denise for the last 5 minutes. So in 2009, Permaculture Artisans got audited. We got audited for the year of 2008. And the reason why we got audited was because of how we claimed our office space, but mainly the demonstration garden. And I know those of you who are following the system in Teachable, in the student portal with all the video trainings, you know, I talk a lot about setting up your demonstration garden, your showcase garden, that you can have education, you can give tours, you can create a portfolio from that. It's a place where you can bring people to really show off what's possible. And so I had that as in my backyard. And my accountant at the time thought that we could do a 50% write-off on everything to do with that showcase garden, along with 50% of all of our utilities and 50% of everything. And that's what we got audited for, was for trying to take too much. But in the end, it actually was a great learning experience. One, I realized that this accountant was not a good match for me. So in the middle of the audit, I had to fire my accountant. And that was the third accountant that I'd had for my business. Getting a good accountant is not always the easiest thing. So I would, try and find that good match. And it might take a couple of years to really find a good one. The accountant that we use now is the same accountant I hired in the middle of the audit in 2009. And he really saved us. He saved us tens of thousands of dollars by helping us work out this pattern, what Denise is sharing with you about the percentage, getting the appropriate percentage write-off on your home office and utilities, because really that is a really key part of what you can write off on your taxes. A key part of running your business is utilizing that if you have a home office like that. And your showcase garden, your demonstration garden, one of the things that we had to prove was that it wasn't just a recreational space for us personally, a personal recreation space, but that it was a business space. And we had to prove that that was its function. So just keep that in mind. I'll share more about that story in a future one of these sessions, but I just wanted to touch on that there because Denise was bringing this issue up to just make sure that you have a little coaching when you start to look at your showcase demonstration garden and your activities around that, and then figure out what is write-offable, because there is quite a bit write-offable there. What we ended up getting through our audit, which was amazing, working with our accountant, same one we have now, is the that the IRS decided that we could write off 30% of everything, of the whole showcase garden and all the things that we were trying to write off. We could write off 30% rather than 50%. But then they made us do that every year after. So every year we had it locked in with the IRS that we could write off this larger amount, even though what's interesting is that we were writing off the development of the garden, and then we didn't have a lot of development costs, but we were still getting to write off 30%. So so there's a lot of interesting little pieces in there, and it ended up we ended up moving from that place. So as soon as we moved away from that garden, we didn't have, it changed the pattern. And now we have a whole other business that owns the Permaculture Skills Center, which is of course a 5-acre demonstration farm and garden, and we have all kinds of write-offs and expenses and things maintaining that site. So it's now under a different business structure. But I just wanted to mention that too, that as you start thinking about, what are you, part of what Denise is putting a big spotlight on is, what are all the things you're actually investing into your business with? Some of them you might just think, oh, well, I'm just going to do this because I know it needs to be done, but you may think of it as a personal activity and not a business activity. And so a big part of why that spreadsheet is so important and going down line by line is for you to really step back and see that, wow, there's potentially a whole bunch of activities that you're doing, a whole bunch of things that you're spending money on that are just coming out of your pocket because you're not expensing them into your business. And this potentially could save you thousands of dollars, or get you to the point where you're paying hardly any taxes because you've been able to write off all these expenses, and that offsets your tax liability. So that's why this is really, really crucial stuff. Even in the beginning of your business, this is really crucial stuff, to build a successful business, to manage your cash flow, and to have a thriving business year after year after year. Closing thoughts, Denise, in the last 5 minutes here?
Shoot, I had something I was going to say. I can't remember what it was now. I'm so intrigued with your story about the showcase garden. I think that I can talk from experience too, having been a business owner, and I was a self-service, I did bookkeeping. I didn't have a lot of write-offs, but what I did have the advantage of, which was great, was I had a cell phone, whether I had a business or I didn't have a business. Next thing you know, I got to write it off. My mileage, I was writing off. My insurance, my car insurance, got to write part of it off. The repairs I did for my vehicle to get to and from my different clients, I got to write off. All of a sudden now I'm getting to deduct all of this from my revenue, before I had to pay taxes on anything, right? So it is, being self-employed is definitely a beautiful thing. Last year was the first year in 25 years that I literally had no self-employment income. And I got to tell you, my tax return wasn't quite the same. So I just want to say it's really advantageous from a tax standpoint to be running a business through it. And they know, like if you are going to get a loan or something, they will be able to read into your tax return and say, oh, well, they'd have those expenses no matter what. So really their business did earn more money than that, even though your tax return shows a loss. Anybody in the financial world will be able to read into that. It's just, we don't give as much to Uncle Sam. So again, it's good stuff in, good stuff out. You want to make sure you're capturing this. That's why I kind of elaborated so much. If nothing else, please remember your manila envelope and just keep your receipts in manila envelope to at least input. Don't get rid of any receipts. Keep copies, keep all of your bills, your utility bills for your home, everything, because you're going to need that come the end of the year. So I think that's the biggest thing I can say is save everything.
And thank you so much, Denise. And for next month's bookkeeping session, what should we be preparing ourselves to learn about next month?
Next month, I would like to really go over how we apply some invoicing, and how I go about invoicing would be a big part of what I'd like to do, how the receipts actually correlate directly into a job. I do have some profit and losses by jobs that I've run up and I have captured. So you can see kind of what my income was, how I've costed some different things against it, and what our profit actually ended up being by a specific job. So I've got a few of them for you guys to be able to see. So I can delve more into that.
So next month, invoicing, profit and loss statements, costing into a job. Denise, thank you so much for taking the time with us today. And folks, if other questions come up about anything that we've covered during this session, go ahead and ask questions in the Facebook Mastermind community. Denise and I are both in there. We can do our best to answer some of your questions. We will be uploading the spreadsheet that Denise was going through during this session into the student portal on Teachable. So check that out, and we will see you next time.
Great.
Thank
Bye,
you so
everybody.
much.
Thank you.
Bye.